Hey, it's Chris with Life 180, and I get asked all the time, how much money should I try to save inside of my whole life insurance policy? Now, that's a tricky question, but I have a pretty simple answer. My simple answer is the base level that you want to achieve is 2 years of income, household income, that you want to get to inside that policy. So it's different for everybody. If you have a household income of $50,000 a year, I suggest that you get to $100,000 a year of income. If you have $100,000 a year, I suggest you get to $200,000 in income. If you have $500,000 a year of income, I think you should get to $1 million of cash value inside of your policy. And here's why. First and foremost, let's think about the world around us. Let's look at the economy. Let's look at the environment. Let's look at the world. Let's look at your personal situation. I'm a big believer that, and if you haven't seen this, I did a video called the Life 180 Pyramid Talk. And that video on its own, I think if you watch it, and I'll link it in the description below, is just an amazing video when it comes to educating you on how to financially structure your life for more security, more guarantees, more opportunity, and more control with your money. And when you have those four things, it sets you up for success in any economic environment, in any political environment. We can't control what's going on in the world around us, but we can control the financial system and structure that we surround our lives with to set us up for more predictable success. That's my belief, and that's what I know to be true. So here's the deal. If you set yourself up with 2 years of income inside of a policy, here's what you're doing. You're putting yourself in an opportunity where your money is going to be accessible, it's going to be guaranteed, it's going to be growing at a faster rate than inflation, that's going to be better than what the banks are doing for you. It's not going to be quite as liquid as a bank in some situations, but you're talking, anywhere from 72, like 3 to 7 days, you'll be able to get your money out of this policy. Any emergency you're going to be able to kind of solve the need for financially in that 3 to 7 day window, a life insurance policy is a great place to have it in there. So an emergency account, anytime you want to invest in real estate or do any kind of other investment, you can typically accomplish that with that kind of window. So here's why I think 2 years is so important. Look at the environment around us. The unemployment rate is really high right now. It's coming down a little bit with COVID and the recovery and all that stuff. I'm a big believer that things are going to get a little worse here in the future because we got to take our medicine at some point in time. We've been living on stimulus and government assistance and checks and forbearance and all this stuff for a long time. Businesses are closing. There's going to be a commercial real estate crisis. There's all sorts of things happening that we don't know where things are going to go. We don't know where the economy is going to go. We don't know how the government is going to intervene. We don't know if Federal Reserve policies are going to hold up the economy, if things are going to tank, if it's going to be a 2008 overnight again where we go to bed thinking everything's fine and we wake up and the sky is falling kind of situation. We have no idea what's going to be happening. What I know is you need to be positioned to be successful in any environment. If the economy keeps going well, you're all set. If the economy takes a dive, you're ready to take advantage of opportunity because people make money. The more millionaires are made in times of crisis than in times of opportunity. So with the unemployment rate what it is, the average length of time for people to find a job is 1 month for every $10,000 of income right now to find a job. So what does that mean? That means if you have $100,000 of income, you need 10 months to find a job. So if you had $100,000 of income, that's $200,000 in a policy. Guess what? You need $100,000 in that policy to be able to find your job, to be able to not have to take a step backwards in standard of living, to make sure that all your bills are paid, to make sure your kids are taken care of, your wife is taken care of, your husband, the family is taken care of, and that way you are protected on that level. However, in those times of crisis, when you're also looking for a job, you don't want to have to make economically desperate decisions, right? So you want to make sure you're setting yourself up for success and that you can take advantage of opportunity. Because if the economy goes into a nosedive and you lose your job and you're looking for a job and you can't find one, you can't get more cash flow, you don't want to just be making desperate decisions looking for a job and pinching pennies. It's always, I believe, important to set yourself up in a situation where you can be looking around you for opportunity. That's where millionaires are made. Listen, I know a guy named Corky. He bought in 2007 and 8 when the economy in Florida tanked. There were these condos and houses that he bought in Florida, in the Tampa Bay, Florida area that were over $400,000. They dropped down into the $75,000 to $90,000 range. He bought 4 of them cash because he was set up in the way that I'm talking to you about. And he bought them cash, knew that the economy would come back. But why? Let's talk about why he was able to buy those houses cash. Because people didn't have their financial lives structured properly. When the economy went into a nosedive, they didn't have enough rainy day account money. They didn't have enough opportunity money. And so they had to make bad financial decisions. So they had to let their house go into foreclosure. And a high enough percentage of the people in this country did that, so that it caused a financial crisis on the real estate market. Housing prices went down. So people who were prepared, who were actually structured properly, were able to pounce on that, take advantage of it, buy properties at pennies on the dollar. And then what happened? The economy always comes back. And guess what? I believe personally, it always will eventually. And sooner than later, real estate's one of those beautiful things that it's really hard to get hurt or burned if you buy really low, right? And so I would argue that buying a house at the $400,000 range for $75,000 to $90,000 is buying low, right? It's hard to get hurt when you buy it at 90 grand. And so of course those houses appreciated in value, they went up, he sold all 4 of them for a combined about $1.2 million. And guess what? The guy pocketed over $800,000 profit. Like, that's what I'm talking about. That's how you create wealth really quickly, but you have to structure yourself to be able to take advantage of those situations. Doing that inside of a whole life insurance policy is one of the only ways you can do it. The problem is people are looking at whole life insurance and only looking at the rate of return inside the policy. When you do this properly, you cannot compare a whole life insurance policy to an investment because it's not the same thing. It doesn't have the same risks. I don't believe you should take risks inside of an insurance product. The risks you take should be outside of the insurance product. And so what you do is you use it as a storage vehicle to guarantee your money, to guarantee the value in your account. And then when you find opportunity that you understand, that you're willing to take a risk with, then you borrow against your policy. You never interrupt the compounding inside that policy because your money is not coming out of your policy. It's a loan against your policy as collateral from the life insurance company. And so now you pay down the loan when it's time for you to do it. It's a non-structured loan. You don't have creditors having to approve you. If you have to miss a payment, it's not going to kill you. It's not going to, bang up your credit report or anything of that nature. So you're good to go. So that's the reason I say the first kind of pinnacle framework that you try to get to as far as cash value in your policy is you want to get to 2 years of income of cash flow, of earned income inside of your whole life policy. That will set you up to make sure that you have a rainy day fund, that you're protected if you lose your job, if anything really bad happens in the economy, you're insulated. And you also have an opportunity fund. Obviously, you want to make sure your rainy day fund is covered first, then the opportunity fund. But you have to start somewhere. So one of the beautiful things that I see people doing all the time is finding money that they're like losing in other areas, repositioning that money, dumping it into your policies, finding capital in other areas of your life that are operating ineffectively for you, repositioning inside a dump into a whole life insurance policy, and it works really well in a lot of situations. That's it. So if you have any questions about any of this, feel free to leave it in the comments. I'd be happy to engage with you. If you have any questions at all, you can also email me, chris@life180.com. Happy to talk to you, engage with you, give you any kind of coaching and advice possible. I try to make it as easy to reach me as possible. If anybody wants to reach out to me, by all means, there's definitely no barrier to entry. So reach out, happy to assist in any way possible. If you found value in this video, please click the like button. It definitely helps the channel out, helps the analytics. YouTube loves it when videos get a lot of likes. Hit that button, make sure you subscribe, hit the bell, that way you get notified every time I launch a new video. And yeah, that's it for this video. I hope you found a lot of value in it. I hope it inspires you to go out and look at this a little differently, think about your financial future a little differently. And until next time, have a blessed, inspirational day, and we'll talk soon. See ya.